Thank you for joining us for our webinar today, Top 10 Red Flags Your Nonprofit Needs to Know About. Before we get started, I wanted to mention that there's a chat feature for this webinar, and you can ask your questions at any time during the presentation. The chat button is at the bottom of the PowerPoint as you hover over it. We will answer all the questions at the end of the webinar during the Q&A portion, but feel free to ask questions via chat as you think of them. Our presenter today is Kirsten Houghton. Kirsten is a principal with SBA Certified Public Accountants and leads the Nonprofit Services Group. In addition to providing audit, accounting, and tax service specific to the nonprofit industry, Kirsten also provides review, compilation, and management advisory services. She has a wealth of nonprofit knowledge relating to taxation and has expertise in financial accounting, financial statement review, and audit specific to the nonprofit sector. She holds a Certificate of Nonprofit Board Consulting from BoardSource and leads the SBA Board Building Training Program. And with that, I will hand it over to Kirsten.
All right, thank you, Jennifer. So we're going to get started on our presentation for today. And I actually probably have more than a top 10 red flag list. So we'll go through different scenarios, things that can happen with your board. And this is just a summary of some things that can happen. Lots of things can go right and go wrong. So let's get started right away. How does a board member spot red flags? So key here is just learning how to ask good questions. You may have board members that have been on the board a long time and they've got a lot of experience and they pretty much know what's going on, but you also may have people that are new to the board, and just encourage them to ask questions, build that culture where people feel comfortable. That's the key, because you're going to have people that don't not necessarily understand what they're looking at. Make sure your board members have access to financial reporting, the program results, and strategic goals. So with financial reporting, make sure that what they're seeing from your on-staff accountant or your third-party accountant, that those financial reports are accurate and that they reflect the current month, quarter, or year activity. There's nothing worse than looking at information that's not complete and you're trying to make decisions based on that information. So moving on, we talk about ineffective board meetings, and there's a lot of red flags that go on with that. And I'm sure many of us have probably sat through a board meeting like this, where there's no preparation, board meetings might be canceled, nobody shows up, you've got endless discussions, board members go off topic. So no preparation in advance of the board meeting, that can be not necessarily the board member's fault. If you are not sending out materials in advance, it makes it very difficult for people to be ready and prepared to go. Give them a chance to get the information. Okay, we'll continue. Board members aren't showing up. You've got your endless discussion, people that want to go off on their own tangents and topics. So how do we solve this? So make sure you've got an agenda. Send it to board members at least 7 days in advance. And you might be thinking, well, that's not possible because it's just how your organization works. But at least get it out in advance so that people know what's on the agenda and they can prepare, whether they're preparing questions or reading over materials, whatever that may be. Give them all the information they need that goes with the agenda so they're prepared and informed. Make your agendas detailed and goal-oriented, but include time for new business. Key with that, you might want to put new business at the beginning, because sometimes, well, many times we get through our board agendas and we're at the end and we've got 5 minutes to go and really needed a lot of time to talk about things that are happening within the organization. Make sure that you are making the board agenda tackling a strategic item. So keep your strategic plan in mind and chip away at that with those goals and making sure that you're accomplishing that part of the board work as well as just the things that normally go on a month-to-month basis. Make your meetings about decisions and not updates. You do have updates all the time, but keep that information where the board expectation is that they're reading that information in advance and just voting whether to approve. There might be a question, but make decisions at your board meetings. And then the obvious, take minutes. But with minutes, it can be interesting where I've seen minutes that are very general, and you do your disservice in that way because you don't have any blueprint for your board members to follow as the months go by. Also, if you have new members, they can't follow what happened either. So make sure you've got enough detail in there and make them complete and concise. So other areas to solve ineffective board meetings. Make sure you've got a good board chair. Look at the people that are currently on your board, and are there people there that could be part of a pipeline to keep feeding board chairs into the organization? If not, look to people outside the organization that could be future board chairs. Keep that in mind. You don't want to end up where you're losing your executive team, your board chair, and you're not building that pipeline in behind. Make sure that person has experience, they know your organization, they know how to run a meeting, they know how to handle maybe difficult personalities and conversations, they've got great social skills, all the things that you want in a board chair or a leader that's going to run things for the organization and keep it moving towards its mission and strategic goals. Other ideas? Measure your board effectiveness. So with this, do evaluations. You could consider having the board self-evaluate. So a board member self-evaluates his or her own performance. They can also evaluate the board as a whole. So that can allow you to see where are there holes within the organizations on the board? Where are there things that you could do better? Make sure, again, you've got goals for the meeting. Set those action items. So many times we set action items, and they are forgotten by the next board meeting. So make sure that's part of the culture and part of the agenda, that there's an expectation that they'll be reporting on action items when people convene at the next meeting. With that, you're holding your board members accountable, and make sure you have tough conversations when the fit just isn't right. So what does that mean? That means that you may have a board member that could have been a great donor to the organization or an advocate, but as a board member, it just doesn't work. And maybe that means they can't make it to the meetings because of their schedule, or they're on the board and maybe they're a bit disruptive, or they're just not helpful. And sometimes it's just not the right time for a person, or they're just really not the right fit. So make sure you're comfortable doing that and moving forward with the organization. So now we're going to move into board dysfunction and red flags. So there's a bunch of red flags that can happen with board dysfunction. This is with board members. So is a person there, they're not prepared, they don't understand the organization, they're distracted, they don't bring any ideas. So how did this happen? How do we have a board member that's creating its own dysfunction? That person's creating dysfunction. Probably goes to recruiting. So if we look to recruiting, make sure you are recruiting board members that have characteristics that follow these kinds of guidelines. Look for extensive leadership. Look for somebody who might have crisis management. What I mean by that is they've been through a situation at their workplace or their company where they've gone through something significant. That can be very helpful for an organization, so that if you've got something going on that's significant, whether it's a funding source issue, you've got some staffing, executive director issues, whatever it may be, you've got somebody on that board that can help you with that. The person is collaborative, they're resilient, they can help the organization move forward and deal with setbacks and understand how to move those things forward for you. The next area, another area of board dysfunction is also we have volunteers. Volunteers are your board members, typically. So you may have people on the board that are uncomfortable with fundraising, and I know this happens a lot, and it's just how do you work through that? Well, there's always things people can do in fundraising that is pretty non-threatening. So make sure they have something they can do that they're comfortable with and maybe work towards a bigger role within that type of area. Your volunteer members may have limited interest in understanding the organization's financial model, they may have limited interest or inability to financially support the organization. So this is still an area where it's kind of up for grabs, where people want their board members either to donate directly to the organization or kind of leave it up to them. It depends on your organization and your goals, but if you do want your board members to make some type of financial contribution, you should be very clear about that. Some nonprofits have board members that are constituents of the organization. So for example, say the YWCA typically has one of the women that lives in their building on the board. That person might not be able to give a financial gift, or maybe they can give $5. And that can be okay. You want to make sure they're comfortable, though, and that they're able to do what they can. And then your volunteer members might also have limited interest in critical issues because it's challenging and they're not sure what to do. So make sure you've got the resources in place to help out with that. So other ways to solve this is a board orientation. So make sure you have a board orientation. Make sure it's mandatory for those new members, and it's never a bad idea for existing members to attend as well. Focus on what those board members need to know, answer all of their questions, make sure they're fully on board for your organization to keep moving it forward. Talk about the details. Where are the risks within the organization, the financial structure, the different systems. Make sure they understand what's happening within the organization. So our next board dysfunction is failing to provide effective oversight. So this is where just overall there's no real oversight. So you can delegate to your committees, but again, you have to have effective oversight. Make sure you are following up and knowing what's happening. The board chair should be making sure that policies and procedures are actually followed. As a CPA, the review of the financial statements in Form 990 is one issue that I always talk about. Make sure there's oversight over that function, whether that's a combination of the on-staff accountant, a third-party accountant, the executive director, the board treasurer, a finance committee, whatever it may be. Make sure there's oversight over that function. And then make sure that not only you implement governance policies, and I have some policies listed here, but also that you actually follow them as well, and you check in to make sure that people are following policies as stated. So next, another red flag in board dysfunction is micromanaging our staff. As I'm sure you all know, the board should not be getting involved with the day-to-day activities of the staff. The board's duties are oversight and guidance and moving strategic direction along, making sure that the staff are not contacting the board members and circumventing the executive director and other management, and vice versa, the board is not going down to the staff level and getting involved. Lines can be blurred for smaller organizations, meaning that many boards can be the working board where they're running the actual organization. So that's a bit different there. But overall, if your organization has a well-defined board and a well-defined staff and executive management team, those lines should not be crossed. Another board dysfunction is avoiding the hard questions. So we're sitting in a board meeting, everybody's agreeing and getting along and everything passes and there's no debate. That's not necessarily a good thing. You want to make sure that everyone knows they can exchange ideas, they can challenge each other and have conversations. What comes out of that is typically better ideas and a better direction than what you went in with, because you've got everyone weighing in and coming to a consensus. So make sure that there is time allowed for people to share their ideas and not be afraid to say what they think and say what they think about issues that can move the organization forward. So another board dysfunction, failure to cultivate board diversity. So we think of diversity, the word diversity, and many times along the lines of race and gender, but it can also be skill sets. You need specific skills on your board, whether it's marketing, legal, accounting, fundraising, whatever that may be. You may need program and mission-related skills. You might want people on your board from your population that you serve. You might want other constituents that can somehow help the organization, help move it forward. So make sure that you don't have that homogenous group of people where everybody shares the same ideas, everybody kind of thinks the same way, and you don't have that representation from outside of your kind of bubble. You're going out in the community and getting more and varied opinions to serve on your board. So now we're going to move into financial malfeasance and more red flags. So as I said, there's more than 10. And actually, there's many more than what's in this as well. Financial malfeasance, so overall, and this is an indication of does anyone really know what's going on, there's later or incomplete financial reporting, the board doesn't receive a copy of the Form 990, they don't understand allocations of expenses, no discussion around the auditor's management letter. So what do we do about all that? The worst thing is the late and incomplete financial reporting. Unfortunately, many times over my career, I have seen where we've done numerous adjustments to financial statements so that we know the board has been looking at inaccurate information all year. You're making decisions on that information, so it's key to make sure that you've got talented accounting staff or you're using a third-party provider, whatever it may be, to make sure that the numbers you're reporting are accurate and people can make informed decisions based on that information. The board, as a best practice, should be looking at the Form 990 and not just looking at it and reviewing it, but understanding it. And if that is an issue, it's worth reaching out to your CPA, see if they'll provide some training, and move that along. Other ideas how to solve these issues is put processes and policies and checklists in place to make sure things is done with respect to financial information. As I mentioned, provide training. And then take advantage of time that you have. If you do have an audit or a review from a third-party CPA, make sure when they come to the board meeting to present that you ask questions. That time is yours to use and to learn about not only what you're looking at within the audit and management letter and possibly also the Form 990, but make sure you understand as well. That is your time to ask the auditors many questions and take advantage of that time versus some meetings I've been in where it's been very quiet. So make sure you're taking advantage of our time as well. So moving on from that. So we're not monitoring our key financial indicators. So what is the result of that? Again, no one might be paying attention. Your organization could be in serious financial trouble, you lose staff, and worst of all, the reputation. As we all know, it takes years to build a reputation, but it can take overnight to destroy it. So want to make sure that people are monitoring, the executive director is communicating financial results. If you got issues with payments to vendors, you can't make payroll, you've got a lot of things going on that are not working well for the organization. So what do you do about that? A finance committee is always a good idea, filled with people that understand what they're looking at. They've got some experience in nonprofit financial reporting, or maybe quite a bit. They can provide financial oversight. And again, requiring monthly reporting and closed financial statements. That I can't stress enough, because I'm sure it's frustrating for those of you that are listening that are board members where you're looking at information that's not correct. At that point, you might as well not look at anything. So make sure that you're cleaning up that oversight, the accounting function, and again, as I mentioned earlier, taking advantage of time with your CPA firm so that you can learn and understand what you're looking at. So moving on from that, we are looking at being too trusting of staff who handle cash. So this is the old difficult issue where we trust our staff and we don't want to think anything would go wrong. But if there are issues within an organization where one person can access all phases of a transaction, so for example, they're in the accounting system, they can cut a check, they can sign a check, they can create a new vendor, you've got an opening for someone to defraud the organization. Same with cash receipts. They get the checks in and the cash, they make the deposit, they do the bank reconciliation. Again, they have access to all phases. And if no one's providing any oversight and there's no limits on check writing, no one's looking at anything, this is where things can go horribly wrong. So make sure you've got controls in place. So how we deal with this when we see issues in internal control is we always talk to the people involved and talk about what they can do. And we frame it in the sense of, we're making these suggestions so you can help protect your employees so that no one can accuse them of doing something wrong. And also you can protect those future employees, the people you don't even know yet or haven't met. Because what you don't want to have are some gaps and holes because we're relying too much on trust, so that down the road, you have the new person that maybe has a different agenda, or with your current employees, there could be some crisis in their personal lives, and if the access to assets is too easy, it could become very tempting. So I've got a list of a few things you can do: segregation of duties, limits on check writing, policies and procedures. Mandatory vacations can be key. Many times fraudsters and organizations never take vacations because they're not physically there to cover up for themselves. So make sure people are going on their scheduled vacations. Okay, the next thing, a little bit more on financial malfeasance, and then we're about ready to take some questions coming up. There's lack of strong external checks on financial reporting. So many organizations have no requirement to have an audit or review. Their revenue could come from program service. There's no requirement from the state to have an audit review. Nobody's from the outside ever looking at the books, and maybe even the board or the executive director doesn't look at anything. And that actually does happen. I won't say quite often, but I do come across it. So if your organization feels they want an audit or a review, you can always contract with a CPA firm to do that. You could put that as a requirement into your bylaws. You could also hire a CPA firm or another independent third party just to look at the numbers, compare them to the third party reconciliation, so like the bank statements and things like that. And there's other procedures CPA firms can do to really get at what is the issues within the books and records. As I mentioned, you can amend the organization's bylaws, but when we see issues like this, we do always recommend that management reviews the financial information, but also initials the reviewer, provides some other documentation that they actually looked at something and reviewed it. Also requiring that the board treasurer, the finance committee is providing oversight as well. So this is really key because there's lots of things that can happen and go wrong when no one's looking. And if people within the organization know that no one's looking, it's just that further temptation that you don't want to encourage. Another area of financial malfeasance is spending funds restricted by time or purpose. So this I'm referring to your restricted funds that you receive from your donors. So many times you have special things going on within the organization that you want your donors to support, whether that's a capital campaign or it's program activities that you want an ongoing stream of support so that those activities can continue year to year. That money is restricted if the donor specifies as so and should be held off as restricted and not be part of operations. Unfortunately, I have seen that there is many times one cash account, so all the money's in the same account. And it's very easy even to accidentally forget that not all that money is available for operations. And so if that money is spent down and say you've got $25,000 in your cash account, but you've got net assets restricted or restricted funds of about $200,000, you've spent that money already. And you're using the funds to fix your cash flow issues. So why is that bad? Well, it's really bad, actually. Temporary uses of restricted funds are actually a violation of state law. You're going to dig yourself in a hole you may not be able to get out of, and especially if you're talking about significant dollars. If your donors were to learn about this, they are not going to be happy, most likely will stop funding you, and again, damage the organization's reputation. So how do you fix all this? How do you handle this? Create processes and procedures, making sure funds are spent as intended. One thing I don't have on here is get another checking account. Make sure you've got cash, restricted cash in its own separate account. That way it's very easy to make sure that what's in that account matches what's restricted at the end of the year. That's the easiest way to keep track of it, and that way no one gets confused. One other thing you can do to alleviate an issue with operations is if you have a lot of restricted dollars that maybe the program funding is adequate and you don't necessarily need those dollars to be restricted to help fund your program, and this does happen, you can go back to your donors and explain the situation and say, hey, I've got all these restricted dollars from you, and actually that program is fully funded. Would you be willing to release these dollars into operations? And then we can go forward with running the organization. And having that communication and talking to your donors directly will help, obviously, for them to understand what's going on within the organization, but then will also help the organization to free up funds for operations. So that's another idea. So make sure you're having that good open conversation and expressing exactly what you need with your donors. And that can be a way to solve a potential cash flow issue and also be very transparent about what you're doing with dollars that you're receiving from your donors. All right, so with that, we have come to the end of the webinar, and let's see if we have any questions.
Yes, that was a lot of information. I'm sure people have questions out there. Again, to ask a question, open your chat box and type in your questions via chat, and we will answer them. We have about 5 to 6 minutes for questions. A couple that had come in during the presentation. Number one, how do you build a pipeline of future board members?
Yeah, so that's a really great question. So I was on a board for years, and we developed that strategy. And so it's looking at who currently is on your board and do they have the skill set that you need. So in other words, what are you looking for? Are you looking for an entire executive team? So you're knowing that you've got 2 years down the road, you already have a treasurer in place that's going to fly up, so to speak, become the new treasurer, a new board chair or president of the board, whatever you may call it, and making sure that you've got those people in place. So you may say to yourself, do I have enough people in my board physically there to fulfill, fill positions as they open up, as people come off the board? If you don't and you're using committees, look to your committee members to see who could be future board members. There's some organizations that have a number of people on their committees, and that can be a great area to draw from, where people could then move from committee work into board service and then also move up into executive roles. So that's an idea as well. Another idea, too, to look at is to recruit from outside. Look at the people that are passionate about your organization, are supporting you, are your advocates in the community, and those people might be willing to be future board members, and reaching out well in advance of your needs so that you're being proactive, that would be helpful as well. So keep those things in mind. But the key is to get that pipeline in place so you don't come up short. Things happen, though. People have to resign because they move or different things happen over time, and it's good to have a plan in place to make sure that at least you're filling the holes that you know of today. And then if you've got a surprise happening in the future, you're not in that crisis mode to fill more holes that you weren't anticipating.
Great. Second question, do you recommend an interview process when recruiting board members?
Yeah, so this is a great idea too. I'm not sure if you do this within your organization, but it is a great idea to interview potential board members to make sure if you've got that good fit. Before that person gets on the board, I have a slide about that, where you've got someone on the board and it's just not working, it's just not a good fit for the organization. So make sure you're doing that vetting ahead. You can look to see if they have prior experience, what their knowledge is of the organization, lots of different questions. And it can be pretty informal, but it would be good for not only the board member, but the candidate to meet some board members in advance and find out what's going on with the organization so they make a good informed decision as well.
Next question. Is there a recommended months of reserve of unrestricted operational monies to show a healthy nonprofit? And is this the same as for a for-profit?
Well, I would say it's not the same as a for-profit in a sense. I mean, you need to make sure you, so let's look at it this way. So if you know in an organization that in a typical year you spend X amount of dollars, you'll know what you need basically just to keep the lights on, keep the organization going. So there is no recommended months of reserve that I'm aware of, but you could do whatever is comfortable for your organization, whether that would be 3 months or 6 months, what you could build up. So you've got a cash reserve out there, which could be invested. It doesn't have to sit in your cash account. But make sure you've got enough to cover what would be a typical year and plus a little cushion, and then I would build a reserve. I'd say anywhere from 3 to 6 months. If you've got a lot of cash coming in and you want to get a bit bigger reserve than that because you are anticipating maybe a funding source loss in the future, something like that, if you can build that based on future anticipated things coming up, that's not a bad idea either. So not a concrete answer, but just some general good ideas to make sure you've got cash available. Just keep in mind what's going on today, what could be coming down the road, especially with funding. If you're getting, you got in the wind, there's funding cuts coming, things like that.
All right, and will the slides be made available? I can take that one.
Okay.
Yes, they will. So everyone will be receiving an email this afternoon that has a survey, and we can include a PDF of the slides in that survey email this afternoon.
Also, too, I wanted to mention, so this is just a small part of some of the board training that we're doing with different clients, and it is a small part of red flags that could occur within an organization. There's lots of other things that could go wrong, unfortunately. But we do have a board building series where we have 6 different topics in board training. So if you're interested in that, you can check that out on our website, which is SBA.com. And I am the trainer. And if you are interested, I'd be happy to meet with you. How we work it is we meet with you, see what you're interested in, where the needs are, and then design the program around that based on our 6 core presentations. So it's great board training, gets your members up to speed, and could be really helpful for you.
Great. Well, we are about out of time. I want to thank Kirsten for the information. That was a lot of information.
I know, it was. And so I've been thinking with the slides, you'll get the slides, but also if you have follow-up questions, my contact information is right on there, my phone number and email. So feel free to email me or call me. I'd be happy to answer questions because we did cover a lot of information in just a half hour.
Yeah. Great. Thank you, Kirsten. And thank you, everybody, for joining us today. We hope you have a wonderful day. Bye-bye.